Now, following the signing of the Privatization Bill, Kenyan President William Ruto says the East African nation is ready to sell 35 state companies, which are yet to be announced. This in a bid to boost private sector involvement in the economy, which is predicted to grow at 5% this year. Joining us from Kenya with his take on the planned move and its potential impact on the country's economy is Aly-Khan Satchu. He's CEO at Rich Management. Aly-Khan, thank you for your time and a good afternoon to you.
It's a pleasure to be speaking with you. Thank you.
Let's talk about this bill and how it has been received, maybe by normal citizens, but also by business and the government at large in Kenya.
So I think, this bill was signaled severally in several speeches. The president had been speaking about reinvigorating the privatization program, but only now, just today, we've seen some flesh on the bone with a number of companies now listed to be privatized. This was announced about an hour and a half ago. Kenya Pipeline, KICC, the National Oil Corporation, amongst others. So I think there is finally some momentum building. We've not had a privatization since Safaricom's sale of shares in 2008. I think it's long overdue, and I think the government is now keen to put some momentum behind this process.
Let's talk about the motivation. I think that's an important one. Why has the president and the government of William Ruto decided to go in this direction?
So I think, the lapse in the privatization program, which underwent a significant progress under President Kibaki in the 2003 to 2010 era, was a significant lapse on the side of the government. It increased the shareholder democracy. It took companies which were underperforming out of the public sector, and they perform significantly better in the private sector. I think so. One of the impulses is to get back to that economic program which was so successful. I also think, we're under some financial constraints at the moment. We've had to increase our reliance on the IMF and the World Bank. There's been significant pressure on the fiscal side. And I think in part, this is to alleviate that pressure and is a response to the economic scenario that we're currently facing. It is a win-win, however. I think the key issue for me is if the government is selling stakes in these companies, they should sell them at attractive prices, because if you've got a pipeline, you need to keep that pipeline flowing. If you try and extract the last shilling from the first sale, the pipeline will dry up.
What's interesting, I'm about to say that, of course, the bill is maybe the first step, and now that we know what the entities are, that's the second step, Aly-Khan. But the big, task ahead here is the business and investment cases for these 35 companies. I'm wondering how difficult a task might that be? If I think of SOEs, seldom really are operating at their operational optimum. And I'm wondering if that's the case with some of these SOEs as well.
Absolutely, you're completely correct. And this is a symptom of a disease, unfortunately. We're not only seeing in Kenya, we're seeing across the continent. I think that's why they've got to come first with a flagship SOE, which has a compelling business case, and they need to sell it at a very attractive price. And looking at these companies that they're proposing to list, something like the Kenya Pipeline Corporation, highly profitable, attractive company. I think that could be one of the first to be put for sale. National Oil Corporation, I'm sure, would be an attractive fit for a big oil major looking to enter the Kenyan market. So I think the questions you raise are absolutely correct. But bear in mind, the turnaround can be quite extreme and positive. When you're taking it out of an underperforming SOE structure, you're putting it into the private sector. As long as you're allowed to make the changes, optimize the employment footprint, and also capture the market opportunity, then I think we're okay. But really, this is something that African countries across the continent should be focused on at this point in time.
I'm also keen to find out a little bit more about listings and the stock markets that could possibly, enjoy some of these listings and the liquidity there as well. Aly-Khan, could this actually be a means of improving liquidity here, and also deepening financial markets and development?
Very, very good question. So just to give you some context, the Nairobi Securities Exchange has been the worst performing stock market worldwide over a 12-month period. So really it needs a catalyst. We had numerous new investors, about 2 million during that privatization program I described more than 15 years ago. And I think, an attractive big ticket IPO priced at the right level, allowing investors to make a profit at the get-go will be a powerful catalyst to get the stock market back on track. We've lost a ton of liquidity at the stock exchange, in part because unusually the Nairobi Stock Exchange has a 50% foreign investor participation rate, and the travails of the shilling, where there was a lack of liquidity, hard currency liquidity, and investors felt trapped in Nairobi when they sold shares, was one of the reasons, for the current downturn. So I think we've got to look at a number of things, but I think if everything is done correctly, then definitely it will be a positive catalyst to deepen shareholder participation, domestic shareholder participation in particular, and reignite the stock market.
And I can also know that recently, when the Kenyan government was in talks with the IMF, the issue of privatization came up from them. Sometimes in African countries, when the IMF has come up with some sort of recommendations, these ones particularly, there can be pushback. No pushback in Kenya with this specific one of privatization?
Yeah, there has been, I think the pushback comes when individual companies are listed for privatization and issues around employment come up, because normally the SOEs tend to have a lot of fat on the bone, to be frank, because of the political context of some of these SOEs. So I think the moment it gets serious, the moment we see a sequencing of sales, that's when the pushback will come. But, in the context of Kenya's current fiscal position, the IMF and the World Bank have been very supportive, have been backing Kenya to the hilt. And therefore, I think in the business community particularly, people will see this IMF program as a good thing and not a negative one.
Well, thank you so much for taking us through this very fascinating developments. That was Aly-Khan Satchu, he's CEO at Rich Management.